They lied to you. For decades, they told you that silver was just an industrial metal. They told you that gold was a relic of the past. They told you that the smart money had moved on to stocks, to bonds, to crypto, to anything except the one asset class that has preserved wealth for 5,000 years of human civilization. And you almost believed them. But something kept you here. Something kept you stacking. Something in the back of your mind told you that the numbers did not add up, that the price was wrong, that there was a fraud being committed in plain sight. And today, I am going to prove that you were right. Because what I am about to show you is not theory. It is not speculation. It is not hope dressed up as analysis. This is mathematics. This is documented fraud. And this is why silver at $100 and gold at $6,000 is not a fantasy for 2026. It is an inevitability. So let me show you the evidence. Let me show you the manipulation. And let me show you exactly why the next 18 months will create more wealth for precious metals holders than the last 18 years combined. Let's get into it. Before I give you my price targets, before I show you why $100 silver and $6,000 gold are not just possible, but mathematically certain, I need to expose the fraud that has kept these prices suppressed for decades. Because if you do not understand the crime, you cannot understand why the criminals are about to lose. You see, there are two markets for gold and silver. There is the physical market, where real metal changes hands, where miners sell their production, where refiners create bars and coins, where stackers like you and me accumulate real wealth. And then there is the paper market, the futures market, the derivatives market, the market where banks create contracts out of thin air and sell them as if they were real metal. And here is the fraud. For every single ounce of physical silver that exists in COMEX vaults right now, there are over 300 ounces of paper claims. Against it, let me say that again, 300 paper ounces for every one real ounce. This is not investing. This is not price discovery. This is a crime. It is a Ponzi scheme operating in broad daylight, protected by regulators who are funded by the very banks running the scheme. And I can prove it. In 2020, JP Morgan Chase paid $920 million to settle charges of precious metals manipulation. $920 million. The largest settlement in CFTC history. They admitted to spoofing. They admitted to placing fake orders. They admitted to manipulating the price of gold and silver for over 8 years. But here is what they did not admit. They did not admit that the manipulation is still happening. They did not admit that every single major bank is doing exactly the same thing. They did not admit that the entire paper market is designed to suppress the price of real money so that their fiat currency system can survive. But the data tells the truth, even when the banks lie. Last month, the Bank for International Settlements released their quarterly derivatives report. This is the central bank of central banks. This is the institution that coordinates global monetary policy. And buried in Table D7 of their December report was a number that should have made headlines around the world. Total outstanding gold derivatives, $962 billion. Total outstanding silver derivatives, $189 billion. Combined, over $1.1 trillion in paper claims against metals. $1.1 trillion. The entire above-ground gold supply is worth approximately $13 trillion. The entire above-ground silver supply is worth approximately $1.4 trillion. So the banks have created paper claims equal to nearly 10% of all physical gold and almost 15% of all physical silver. But it gets worse. Those derivatives are not spread evenly across thousands of institutions. They're concentrated in 4 banks. Just 4 banks hold over 80% of all precious metals derivatives in the United States. And those 4 banks are net short. They are not hedging. They are not providing liquidity. They are actively betting against the price of gold and silver with leveraged positions that would be illegal in any other market. This is the fraud. This is the crime. And this is why prices have been suppressed for so long. But here is what changes everything. The fraud only works as long as nobody asks for delivery. The fraud only works as long as everyone is happy to hold paper claims instead of real metal. The fraud only works as long as trust in the system remains intact. And that trust is collapsing. In the past 12 months, COMEX registered silver inventory has dropped by 43%. 43% of deliverable silver has left the vaults. Real buyers, real demand, real metal walking out the door. COMEX registered gold inventory has dropped by 31%. The London Bullion Market Association has reported the lowest gold float in over a decade. The Perth Mint has waiting lists extending into 2026. The US Mint has suspended production of multiple silver products due to blank shortages. Do you understand what is happening? The physical market is draining. The real metal is disappearing. And every single ounce that leaves is one less ounce backing those 300 paper claims. This is not sustainable. This is not stable. This is a system approaching critical failure. And when it fails, when the paper promises cannot be kept, when someone large enough demands delivery and is told there is no metal, That is when $100 silver and $6,000 gold go from fantasy to reality overnight. Now let me give you the mathematics. Silver first. Current price, approximately $31 per ounce. All-time high, approximately $50 per ounce, set in January 1980 and briefly touched again in April 2011. But here is what they never tell you. If you adjust the 1980 high for real inflation, not the manipulated CPI number, but real inflation calculated using the methodology from before 1980, that $50 equals over $600 in today's purchasing power. $600. The all-time inflation-adjusted high for silver is $600. And we are sitting at 31. Silver has never been cheaper in real terms, never in recorded history. But let us be conservative. Let us not aim for the inflation-adjusted high. Let us just look at supply and demand fundamentals. Annual silver mining production, approximately 820 million ounces. Annual silver industrial demand, approximately 650 million ounces, and rising. Solar panels alone consumed over 140 million ounces last year. Electric vehicles are adding another 50 million. Electronics, medical applications, water purification, 5G infrastructure. Demand is exploding. Annual silver investment demand, approximately 300 million ounces and rising. Total demand, 950 million ounces. Total supply, 820 million ounces. Deficit, 130 million ounces per year. The silver market has been in deficit for 3 consecutive years. We are consuming more silver than we are mining. And unlike gold, silver gets used up. It gets consumed in industrial processes. It disappears into landfills. It does not get recycled because it is too cheap to bother. But if the price rises, if silver hits $50, $60, $80, suddenly recycling becomes economical. Suddenly above-ground stockpiles start to matter. Here's the problem. There are no above-ground stockpiles. The strategic reserves are gone. The government stockpiles were sold off decades ago. The COMEX vaults are draining. The ETFs are bleeding metal. There is no buffer. There is no safety valve. There is only a 130 million ounce annual deficit and a paper market creating fake supply to fill the gap. When the paper market breaks, and it will break, the price must rise to destroy demand. The price must rise to incentivize recycling. The price must rise to balance a market that has been artificially suppressed for decades. $100 is not the ceiling. $100 is the floor. $100 is where equilibrium begins. Now gold. Current price, approximately $2,600 per ounce. All-time high, approximately $2,075. Recently exceeded. Gold has already broken out. Gold is already making new highs. And the mainstream is already starting to notice. But they do not understand why. They say gold is rising because of inflation fears. They say gold is rising because of geopolitical tensions. They say gold is rising because of uncertainty. These are surface explanations. These are the stories they tell to avoid the real truth. Gold is rising because central banks are buying. Not Western central banks. They are still suppressing. But Eastern central banks, China, Russia, India, Turkey, Poland, Singapore, Thailand. Dozens of nations are accumulating gold at the fastest pace in 50 years. In 2022, central banks bought over 1,000 metric tons of gold. In 2023, they bought over 1,050 metric tons. In 2024, the pace has accelerated further. Why? Because they know what is coming. They know the dollar system is ending. They know that when the United States weaponized the dollar by freezing Russian reserves, every nation on earth realized that their dollar holdings were not safe, that their treasury bonds could be confiscated, that their wealth could be stolen with the stroke of a keyboard. And so they are converting. They are de-dollarizing. They are accumulating the only asset that has no counterparty risk, the only asset that cannot be frozen, seized, or inflated away. Gold. $6,000 is not a fantasy. $6,000 is what happens when central banks that control half the world's population decide they would rather hold gold than dollars. And they have already decided. The buying is already happening. The only question is how fast the price catches up to the physical reality. Now, let me put this together. Let me give you my timeline for 2026. First quarter of 2025, silver tests $40, gold tests $3,000. The mainstream begins to pay attention. CNBC runs stories about precious metals. The public starts to FOMO. Second quarter of 2025. Silver breaks $50 for the first time since 2011. Gold breaks $3,500. Paper markets experience the first delivery failures. Settlement in cash becomes common. Trust begins to crack. Third quarter of 2025. Silver hits $65. Gold hits $4,000. Physical premiums explode. Dealers run out of inventory. Waiting lists extend to months. The disconnect between paper and physical becomes impossible to ignore. Fourth quarter of 2025. Silver hits $80. Gold hits $5,000. Major institutional investors begin demanding allocated, segregated, audited physical metal. The ETFs face redemption crises. The vaults are audited. The fraud is exposed. First quarter of 2026. Silver hits $100. Gold hits $6,000. The paper market collapses. COMEX defaults or settles in cash. London suspends trading. A new pricing mechanism based on physical reality emerges. And beyond, I do not know. When a fraud this large unravels, when a manipulation this persistent ends, prices overshoot. Silver could hit 200, gold could hit 10,000, or the system could be reset, revalued, restructured in ways we cannot predict. But I know this. Whatever comes next, whatever chaos unfolds, whatever new system emerges from the ashes of the old, those who hold physical metal will be protected. Those who trusted the paper will be wiped out. Those who stacked while others laughed will be vindicated. And that brings me to you. You are watching this video because you already know. You already sense the fraud. You already feel that something is deeply wrong with a system that can create infinite paper claims against finite physical reality. And you are right. Every ounce you have stacked is a vote against the fraud. Every bar you have hidden is a piece of the future they cannot control. Every coin you have accumulated is insurance against the chaos they have created. Do not let them shake you out now. Not when we are this close. Not when the fraud is finally being exposed. Not when the mathematics of $100 silver and $6,000 gold are becoming obvious to anyone who can read a supply and demand chart. They have lied to you for decades. They have manipulated prices for generations. They have called you crazy, paranoid, a conspiracy theorist, a fool. But the fraud is ending. The manipulation is failing. The paper is burning. And you were right all along. $100 silver, $6,000 gold, 2026. This is not hope. This is mathematics. This is justice. This is the inevitable conclusion of a fraud that has run out of time. Hold your mettle. Trust the fundamentals. And I will see you on the other side. Stay awake, stay informed, and as always, stay stacking.